In today's episode, we are going to receive great leadership advice from my portfolio manager, Jared Bowers. It's entitled Leadership Advice from My Portfolio Manager. You're going to be fascinated of the correlation between leadership and investing. They're very much in the same world.
At Initiative One, we're igniting a leadership revolution by helping organizations eliminate the drama, improve decision-making, and win as a team. Join Dr. Fred Johnson on the Leadership Initiative podcast as we uncover insights to maximize your impact and transform your life.
Welcome back to the Leadership Initiative. I'm Dr. Fred Johnson. I'm your host. I'm the founder of Initiative One, and today we are going to have a very special podcast with my colleague and my friend, Jared Bowers. Jared and I have a unique relationship. Not only has he been through our leadership processes over the years, he and not only is a great friend to us, but he's also my portfolio manager. Jared is a principal with Vestira Wealth Management. This gentleman is a savant in wealth management, and we were having a conversation, Jared, about the day that Tracy and I officially started working with you. And when we were talking, you were sharing with us some of your non-negotiable principles of how you do wealth management with a whole list of very successful clients. And as I was listening, I'm going, oh my gosh, this is not about portfolio management. This is leadership 101. And I was so fascinated. And I went, Jared, I've got to have you on our show, man. This is so great. So today is so good to have you.
Thank you.
And so tell us a little bit about yourself, how you got into this, and then pretend that we're in that room as you were going through that spreadsheet.
Okay.
And you began to tell me what your principles are and how that really is more about leadership than portfolio management. So let's just talk.
Sounds good, Dr. Fred. Thank you. I'm really happy to be here with you. A little bit about my background, and then we'll get into that discussion, or at least replaying some of that discussion that we had previously. That it was a unique experience for me because oftentimes when I'm going through that sort of introduction of the portfolio, I'll get more yawns or glazed-eyed looks. But you were furiously taking notes.
Oh my gosh!
You were even, I think, live tweeting some of the things.
It
made me feel pretty special. So I appreciate that, and I'm looking forward to getting into that specifically. But a little bit about my background: I've been in professional money management for about 16 years now. So I actually grew up in farming. Would have been a fifth generation farmer if I'd continued that. And the thing about farming is that I loved it and I hated it at the same time. So when I went to school for my undergrad, I studied business, and that's where I got introduced to the world of financial investing, the stock market, company analysis. I had some very unique opportunities in school and then early on in my career to really get into that. I fell in love with investing very quickly. And thankfully, I've been able to build a career in that over the past couple decades. And now I've been working in my role as portfolio manager of Vestira for almost 10 years now.
I remember when we found you, Jason, who is the founder of Vestira, called me. And he said, Fred, you're this expert at sizing people up. And I found someone who is a real savant. And no pressure, he said, your recommendation of whether to hire him or not hire him is going to be the 100% determination if we move. I'll never forget that conversation.
Right.
And afterwards, I called him and I said, you better hire him. This gentleman is special. I remember that.
I owe my career to you, Dr. Fred. That's true. And I remember we had that conversation when I was still in South Dakota. and you were vetting me. I didn't know really at the time how much you were vetting me or how much your word would carry. You and Jason told me afterwards that if you would have said no, it would have been a no completely. So I am appreciative. Thank
And
you for
so
that.
you were handling the entire portfolio of a very successful billionaire in the agricultural world. And you had a lot of responsibility.
Yes, yeah, and actually it was the billionaire tech founder, which there aren't a lot of tech founders in that area, South Dakota, Iowa area. But that was it was a very unique opportunity early in my career that I was managing the private equity and real estate portfolios, and then I'm doing a number of public equity analyses as well as an analyst for that company. And so it was an unbelievable opportunity. I still have no idea why they let a guy fresh out of graduate school in his early 20s have that much responsibility and be able to work on the projects that I did. But it was an unbelievable experience.
There was.
Yeah.
So let's jump into it. So I remember that day I asked you this question. Said, you guys invest in all these companies.
Right.
And you made this comment about when I said, how do you determine which companies that you invest in?
Right.
And then you made this comment that, well, share with them about when the companies that you need to let go of, it's even more important than adding a superstar. Would you talk about that?
Yeah, we can jump straight to that part of it. Is that there are over 100 companies that I admire. We are constantly scouring the investment universe for companies that we want to invest in or that would be a good candidate to invest in. Our portfolio is relatively concentrated. For our clients and for ourselves personally, we only have right now currently 34 companies in our portfolio, which when you look at the average index fund or the average mutual fund, there's somewhere between 100 and thousands of companies. But we know that if you spread out your investments through too many companies, the best that you can do is basically attain market returns. Now, market returns are good. They've been historically very good. But I don't know why you would want to pay a portfolio manager or a private wealth manager to invest your money if all you're going to get is market returns. You can get that for free. You can get that through index funds. So we don't promise that we're going to beat the market, but we sure promise that we're going to try. And we have historically. We've done a very good job. One of the reasons why is because we concentrate our investments in a relatively small number of companies while still keeping it a large enough number of companies to be diversified. And that right now, 33 companies is a really good mix of that. But when I talk about how we build a portfolio, I do care about finding the best companies. I do care about finding top quality companies. But just as important, and I believe is oftentimes more attainable, is to avoid the bad ones than to think that you can find all of the good ones. We know that we're never going to own every good or great company, but we're going to own enough of them. But I know that I can, with good principles, with good rules in place, I can actually be more confident that I'm avoiding the bad ones and building a very strong portfolio based on that. And so oftentimes to build a strong portfolio, it's just as important of what you subtract and keep out as it is what you put in.
So what's your principle that you determine of who is, you said this, you said you've learned when you're managing this portfolio of companies that it is far more important to remove from the list the lowest performing companies, as it's more important to do that than to find a superstar company that's blowing returns off to add to the top of the list.
Right.
Did I get that right?
You're right. And I would say that it's a balance, right? Of course, you want to find top performers, but oftentimes, and this is you're going to be the guy that does the leadership tie-in because you're the expert there. But I have a life philosophy that everything is investing. And so investing applies very directly to leadership, even more so than it does to other areas. In relationships, fitness, health, everything that we care about, we're constantly making investments in, right? We're constantly using our three limited resources, which are time, energy, and money. And we often think that the investments that we're putting in, a low performer is a small ad versus a high performer is a large ad. But I would say that understanding of accretive performance is incorrect with low performers. Low performers are not a small ad; they're a large deduct. And so, if you have a low performer, if you have a company, or if you have a person in your team that is a bottom tier performer or a low performer,
We call them C players.
C players, sure, yes, that can actually drag down the team more so than an A player can
Pull
add to
up
the
the
team.
team.
Correct.
So we were talking about that period of time about if you as a leader tolerate a member of your team that's either stuck or declining while the rest of your team is growing and getting better, that one stuck leader who is the rest of the team is outgrowing actually becomes a major, almost cancerous impact
Yes.
upon the development of the team. And so you reminded me, quit looking for the superstars as much as holding everybody on your team accountable.
Holding them to a very high level.
Yes.
And if they don't meet those hurdles, if they don't meet those requirements, then they should not be part of the team.
They're making a decision that either they don't belong on the team or the team has outgrown them.
Yes, and I think that can be read as harsh. You probably get that feedback sometimes, Dr. Fred. But I would say that if you have somebody that's on your team that should not be on there, you're also doing them a disservice.
Yes.
Because they will hopefully, with the right encouragement, with the right direction, be able to find a team that they actually fit in well, that they are excited to then become a performer. I think that most people have the ability, the capacity to become a top performer. Now that's where it probably is different, because they're in the portfolios of life, in the portfolio. I believe that we're all portfolio managers. That's what I do as my professional job. I manage portfolios of money, but I also manage portfolios of relationships. I manage portfolios of the ingredients of food that I eat. I manage portfolios of the way that I conduct myself in terms of movement or hobbies. Our lives are portfolios. We have different areas where we actually have control over those factors in terms of being able to influence them. So as a leader, and you have much more experience in this than I do, but many times we can elevate our people as a leader based on our leadership, based on our expectations, based on educating them, moving them forward. As a portfolio manager, though, dealing with public companies, I don't have any control over the public companies that I own. I can't influence them. The only choice that I have is either to add them to my portfolio or not add them to my portfolio, or take them out of my portfolio. So when you have identified where you can make an improvement in the portfolio, sometimes the improvement to be made is to try to elevate a low performer. But in my case, with my portfolio, I have no influence over those companies. My only choice is to cut them. But oftentimes, we need to be able to, with our people, with the people that we're operating with, if we cannot bring them up, the least kind thing that we can do for them is to leave them in a position where they're underperforming. That's harmful to them. I think that's harmful to their soul.
Well, it's not only unkind to them, it's unkind to the rest of your team, because they have to pick up that load.
Yes.
And it's also unkind to your clients or your consumers. It's unkind to everyone that you're trying to serve.
Yes.
Outside of the company.
It is. There's a couple things that I keep in mind when it comes to low performers. And again, this is different. I can have a low performing company in my portfolio and it doesn't negatively impact the good performing companies themselves. It impacts the overall returns, right, of the portfolio. But when it comes to people, when it comes to team performers, if you add a bottom tier, a bad performer to a top performing team, typically that top performing team is not going to bring them up to their level. That bottom performer is going to bring down your top performers. It's going to be a detriment to that whole team.
So you can have a team that, or you can add someone that they may be a high performer. Do you also factor in other components that they may be a high performer, but they're not the kind of company that you want to invest in because of their values? Or
For sure.
talk to us about that.
Yeah. So of the 33 companies that I own, we have strict criteria, at least for entry. Now, we know that based on market cycles, companies go in and out of being a top performer in their industry, or they're in a rebuilding phase. But in order to be added to the portfolio, I can't just admire them. They can't just be a high flyer. They have to meet certain specific strict criteria. And I will not add a new company to the portfolio unless they meet that criteria. So the company has to be profitable.
Give us an example. You just said they've got to be profitable. What else?
They have to also have a strong balance sheet in terms of not having too much of a debt load, having plenty of cash to be able to cover their liabilities and their near-term obligations. They also have to be on an upward trajectory. So I don't just mean about price. Most people think about an upward trajectory from an investment standpoint as the price is going up. Ideally, you find a company where the price is relatively low, but their financial trajectory, their fundamental trajectory, from a profit standpoint, from a revenue standpoint, from a cash flow standpoint, is going up. And the market just has not rewarded them for that yet in terms of price. Now, over time, the only thing that matters is those fundamentals. Just like in a team, the only thing that matters is the actual output, the fundamentals of your team. Whether you get immediate benefit from that in terms of price from an investment standpoint, that's less of a concern than building a strong portfolio that has those strong fundamentals. And I will not add a company to the portfolio unless it's accretive to those metrics that I measure in terms of financial stability, in terms of balance sheet strength, in terms of upward trajectory, strong margins, growing, expanding margins.
What about a company that meets all those, but it's a company that has a horrific reputation?
And that's another thing and what we talked about too when we had that meeting, when you came on with us.
I said to you, there are certain companies that I don't care what their return is.
Right.
I don't believe in what they stand for. I don't believe how they made profit at the expense of other people. I remember that conversation.
Yes, and so I'll take this from a couple tracks when we're talking about that specifically, and I'm glad you brought that up. We care a lot about the management team. We dig a lot into not just the CEO, but the board of directors, the C-suite executives. Are they people who, as best we can tell, are admired within their company, have high integrity, have longevity, have been there for a long time, and have skin in the game? And skin in the game, you may be surprised that there are a lot of publicly traded companies where all they have are managers that take a paycheck and stock options, but as soon as those stock options vest, they're out, they sell. They have very little of their personal financial net worth actually exposed to the long-term value creation of the company, and therefore their incentives are misaligned. They care much more about the next quarterly result than they do about 5 or 10 years from now. Now, me as a long-term fundamental portfolio manager investor, I care way more about 5 and 10 years from now because ideally I would like to hold companies that I invest in forever. I care very little about the next quarter. But when you have a manager and a management team that is very focused on the next quarter because they have none of their long-term net worth tied up in the company, they're not owners themselves along with you. I want to invest in companies that are owners with me, that we are aligned in the same direction. And I think that also applies in terms of leadership and teams, that you want to have the incentives aligned in the same direction. When you win, your team does well. When your team does well, you do well.
And you want to have, what I heard you say that day is that you want to have, you invest in teams where, in companies where the management teams have values that are just, it's what they stand for. Do they make decisions based on non-negotiable values or just how much money they can make? And I remember there was a company that I was working with a few years ago. I won't name them, but everyone would know. And they were bragging that they had made 14 quarters in a row of profit. Mm-hmm. But they didn't talk about that in order to get 2% more, they laid off 4,000 employees 3 days before Christmas, even though they were having a record profit year. But in order to get one more above, they laid off 4,000 people the day before Christmas.
And that's got to be, it's so short-sighted too. And that those types of decisions, you can oftentimes see where the company's values are.
It was
You're exactly
greed.
right.
I mean, they were making an all-time high, ever, the best profit margins in the history of the company, but it wasn't enough. And they were willing to put profit ahead of people. And so that factors into how you look, because if you're putting, if you're a company that invests in people, aren't they more solid over the course of a long period of time?
And that's where my previous comment about longevity comes in as well. If you see a lot of turnover, really across any area of the company, that is a warning sign. When you see companies that will do massive layoffs and then massive hires for boom and bust times, that is, first of all, that's a sign of an unstable market environment that they operate in, or that they're not a very stable operator within that industry. But also, it's very hard in any area of life. It's hard to have long-term impact and build long-term value without longevity. And you know that with the people that you have worked with for decades. I know that I was just in the leadership cohort with Paul that you've been partnered with for 25 years. Is that right? Or
he's been with me through 2 decades.
Yeah. And that's a sign of, when I see people who have longevity in relationships, have longevity with people, that is a very strong sign that they are on a good trajectory. And then also with those companies too, the other piece that I was going to mention is, when I also ask my question of, is this not just how they treat people, not just are they aligned, but are they a company that if people were using them 10 times more or 100 times more, would people be better off? Would society be better off? So if I play that 10x or 100x hypothetical game to say, is this something that if they were 100 times more successful, would the world be at least neutral, hopefully, but ideally better off if they went 100x?
It's amazing that I hear you say that one of the criteria that you look for is, are these companies making our world better, or are they just making money on transactions that don't make the world better?
And that's exactly the comment you made earlier is exactly along those lines. Is, for instance, I cannot bring myself to investing in social media companies, because if I play the 10x or 100x game with social media companies, I don't see a better world. It's similar to, for instance, tobacco companies. Yeah, they make money, they make cash flow, but I cannot bring myself to investing in an e-cig company or a tobacco company or a social media company, because if I 10x or 100x them from a societal standpoint, they might make a lot more money, but that is not a good thing for society. So I do make moral judgments from that standpoint, but it's more along the lines of, if this company was 100 times more powerful than it is, would my kids be better off? Would my family be better off? Would my colleagues be better off? And that is another big part of it as well. And I think that we should be asking ourselves that in terms of our life impact. If we 100x'd our life output, if we 100x'd our influence that we were having, would our communities be substantially better off?
Isn't it amazing, as we wrap this up, I hear you saying that companies that are purpose-led, that have a purpose that is higher than them, greater than themselves, that want to make a deep difference in people's lives, and they have a passion about that, those are the companies, those are the organizations that over time can stand the test of time and the difficulties.
Absolutely. And I know that in my history of working with you and Initiative One, you are a company, you're not publicly traded yet, but if I 100 times you, that would be a positive impact in the world. And those are the types of companies that I am happy to work with. I am proud to be associated with. And so I think that we need to be doing more work like that in the world. That should be our focus. And I really like the work that you guys are doing.
Well, I love the work that you're doing. And, you know, I was so fascinated by that conversation afterwards. Leadership lessons from my portfolio manager. Is there as we wrap this up, anything that you would want to say to the audience that would really say that one thing that you would not, that you live and die by?
That I live and die by. I would go back to what I said earlier, which is I believe that our lives are a collection of portfolios. We are the portfolio managers. We should be investing those portfolios intentionally. We should be investing our time, our effort, and our money intentionally for the outcomes that we're looking for, and treat life as what I said before, my philosophy, everything is investing. I think that if we manage our lives with intention, if we invest with intention across all of the categories that we say are important to us, we will get better outcomes, not just financially, but in our relationships, in our health, across the board. That's what I would say, is that treat life like it is a portfolio that can be managed, because it is.
And it's intentional. It's not reactionary. It's very purposeful. And we teach the people who have the highest impact are people who live their lives by purpose and being in alignment with that purpose every day. That's how you invest in portfolios.
That's right.
Listen, what a pleasure. I love you to death. You're my brother. You're my friend. And you're also taking care of our family for generations to come. And I appreciate you so much. Thank you for joining us today.
Proud to be working with you, Fred. Thank you for having me. I enjoyed it a lot. This was great.
Thank you, brother. It's great to have you. Now you see why I believe so much in this gentleman and the firm that he represents, Vestera Wealth Managers here in Green Bay, if you ever want to check them out. They also have some very clear values and standards by who they choose to work with. Check them out. Hope today has been helpful. Live an intentional life. Live the kind of life that you would want the world to be better because of how you and your teammates are living every day. That's the lesson that Jared has. Hope you have a great day. Join us. Again, check us out if you want to know more about Initiative One. You can go on our website, initiative1.com. You can check us out on Facebook. And you can also join us once a month for our think tanks that we provide as a gift to people all around the country who want to check us out. Thank you for your time. Thank you for caring enough to invest in yourself as well. Have a great day and take care.